You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You know, if you're just a devotee of all things vol views, we love you. But hey, there's a whole other world out there, and the easiest place to find that is jumping over from wherever you listen to this fine program. Could be iTunes, could be our website, could be wherever you find this great program, including our mobile app, and subscribing to our full network, getting the whole kit and caboodle. So that means Options News Rundown, Option Block, Advisors Option, Trading, Tech Talk, TWIFO, all that good stuff. It's all there, ready to be downloaded, streamed directly to your ear holes. Just hit that subscribe button and you're good to go. If you're on one of those platforms, you like what you hear, if you feel like giving us a review or some comments there too, yeah, we wouldn't hold it against you. We don't always ask for those kind of things, but people tend to like to give them every now and then. So go for it. Be sure, don't leave us any timely questions there though, because we don't check them that often enough for that. If you got a timely question, you know how to hit us up. Social media, the website, questions at theoptionsinsider.com, or via the live chat. We do a little bonus for the hardcores out there. We also stream the show live. So for all of you out there who like to get it instantly, directly into your ear holes, every Friday, noon Central, 1 p.m. Eastern, via Mixlr, MIXLR. Follow us on all those platforms. You'll see that link. Grab it once, you're good to go. It's the same link all the time. And then just tune in every Friday, noon Central, and you can listen to all the vol action yourself. And like I said before, if you have a question, if you have a comment, you have an insight, you have a pearl of volatility wisdom you want to share with the rest of the world, hit us up. We do, believe it or not, we do actually like to hear from you guys. We read all your questions. You don't have time to answer all of them, obviously, on the air, but we try to filter up some of the fun, interesting, bizarre, and different ones to answer on the show. All right, and joining me on the old program today, he's actually back, listeners. You know, he's getting too big for us now. He's getting to the point where I go, oh, it's showtime. Let me just send my underlings to do that instead. And his underling actually did an able job last week. Mr. Kevin did an able job, but he's back. The someday in the near future, hopefully, Dr. VIX, Mr. Russell Rhodes, holding down the things over there at the CBOE. Mr. Rhodes, welcome back to the show. Glad you could find time in your busy schedule to join us this week.
I carved out an hour from all of my academic work to join you guys. I missed you guys terribly last week, but I hear Kevin did a satisfactory job, or did he do better than satisfactory?
Oh no, he did great. He did really good. I was very impressed. It was his first time on Vol Views. He'd actually been on the network, as I remember during the show many years ago, in a former life for him. But it's been a while since he's done it, so he did very well. I think I scared him a little bit when I told him he had to do about 20 odd minutes of weekly rundown, but he handled it. ably like a pro. So well done. You should be proud. We'll be joined a little bit later, listeners, by the greasiest meatballs himself, Mr. Mark Sebastian, from Option Pit by way of Carmen Line. But no point waiting on him. The volatility train has to keep on rolling. So let's do that. Let's get right into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was, and indeed still is, from a vol trading and trending and analysis perspective. Like I said, we're streaming this live and recording right around noon central here in the one true time zone. So right smack dab right in the middle of the session, and so far, at least today's session, a bit of a mixed bag. We have the S&P and the Dow up fractionally on the day, about 0.3% or so. The tech-heavy NASDAQ taking a little bit of a breather today, off slightly, effectively, down a little bit. Let's say about 0.2% to the downside, just ticked down a little bit more. And with all this uncertainty on the screen, VIX Cash also taking a little bit of a breather. Apparently, they decided, there's no weekend risk this week, so let's just take it all out of the market, off about 0.75 of a point, right around 11.5. Which, let's do a quick cursory scan. I have to say, Mr. Someday Dr. VIX, your stand-in last week did an able job in shall we say, playing you on the crystal ball, because he was far and above everybody else on the panel last week from a crystal ball prediction. So he was certainly channeling you from that perspective. So well done, sir. There, you've trained him well.
Good. He can replace me as the VIX guy in the near future.
Well, there you go. Yes, he bought VIX pretty hard. I'm not going to give all of our predictions because we'll save that for the end of the show. But it was an interesting range of people. People, including myself, thought it would be a little bit higher. Of course, if you don't factor in today's little smackdown here, we're looking a little bit better for us. But we shall see. We'll get to all that in a minute. Of course, like I said, VIX Cash hovering right around 11.5. A little bit of a quieter week compared to last week. You know, Mr. Rhodes, you decided to take the week off last week, and it was Rock'em Sock'em Robots week. Kevin really got to dive into the fray and really see volatility in all of its glory last week. We had pretty much every day of the week was over 1 million contracts in the VIX options last week. This week, not so much, even though we did hit a high in VIX land pretty much at the start of the week of about 1445. That was back on Monday, and VIX never really looked back for the rest of the week. So all of the previous, fire and fury that had built into the VIX, and of course some of the domestic turmoil that had built into the VIX and everything else, a lot of that slowly being wrung out over the course of this week. We're seeing VVIX also trending a little bit lower. It had spiked over 100, now just shy of 100, about 96 and change out there. So volatility still moving. Certainly not in the low end of that recent range, which is about 75 or so, but nowhere near the 120 to 140 range where it was kind of spiking of late. Mr. Rhodes, you've been off for a while. You had a lot of time to view the volatility. What's been catching your eye this week? And if you want to pontificate a little bit on last week too, because you weren't here, feel free, sir. It was a pretty active week.
No reason to pontificate on the past, but what continued, you just gave a few indications that volatility is relatively low. I'm going to take the other side of that a little bit. The SEP futures are at almost a 2-point premium to spot VIX right now. And in October is up around 1410 or so. So it's, complacency, as it always does or always has for the last few years, is working its way back into VIX. But the steepness of this curve, it should keep people a little bit on edge. So that's probably the major thing that that's been catching my eye. I was actually, as you passed it to me, I was trying to see what oil volatility was doing, and I'm shocked that oil volatility, and I know I'm going off script for a second, but I'm shocked oil volatility isn't much higher considering the battering that they're getting ready to take down in Texas. So it takes more than a hurricane, and I don't know if anybody is really aware of this, a small earthquake in Dallas today. You got to wonder what's going on in the world with all that. But even with all of that in the energy part of the world, we've got OVX under 30. So it takes a lot more to to get volatility going these days.
Yeah, that's something certainly we'll talk about that a lot in a little bit, about an hour and change there on TWIFO, where we talk all things crude vol as well as S&P and everything else out there under the futures options. But you're right, it does take a lot these days to really budge, your crude vol. It needs a aggressive, protractive move, usually to the downside. Could be a super sharp move to the upside too, because there is some bid to those near-term calls, but typically it's to the downside. It's got to be sustained. We've seen it, like we've seen a lot of other products too. Second, that sell-off takes its foot off the brakes, that vol comes crashing in, and pretty much we haven't really seen it take much of a bump here. I guess people were not aggressive enough of a sell-off, I guess, for them to really start pricing it in. OIB up a little bit today, but certainly not a ton. But that said, I'm sure you were probably captivated. You were wishing you were on the show last week, Mr. Rhodes, because that was certainly a rock'em sock'em robots week. Paper flying left and right, vol flying left and right, indices flying left and right. Anything top of mind for you that you really wanted to say on the show last week, but you couldn't make it?
Yeah, it looked on, I want to say Tuesday, or no, it was Wednesday, after Trump's Arizona thing, like we were going to fall off the rails again. The fact that we didn't means that I think his now speeches are turning into his tweets, which are now generally just ignored by the overall marketplace. The debt ceiling thing was a little offsetting. Most people think the NAFTA discussion was probably just angling. It was interesting that VIX was only able to get up to about 13. And the other thing that was crazy, Russell, I don't know if you got to see what the VIX futures kind of behavior was on Wednesday, but it was completely disjointed. There was a period of time where VIX futures expiring in September had a delta higher than the VIX Cash itself. In the morning, they opened up over $1 on a huge run up, while the VIX was still kind of basically up only about 80 or 90 cents at the time. Then throughout the day, they held a correlation of about 1 to VIX till kind of the end of the day, when things finally started to kind of normalize, and they ended up about what they should. But I don't know what happened Wednesday. I think you'll notice that early morning volume was exceptionally high, given relative to the volume on the day. And I think somebody got really panicky or really stuck that morning, because there was just some really interesting price action on that particular day, on that particular sell-off.
Yeah, I was just before you joined us, I was talking about how steep the curve seems to be right now, even though VIX is working its way lower. And you're saying almost the exact same thing in a little bit different way. You're basically saying, you pointed out which is kind of unusual, but not necessarily unusual if you've got somewhat of a jittery market. And that's what we've got. I think the bears might actually be seeing a light at the end of the tunnel with respect to stock prices. And, everybody's very much on edge going into the last 4 months of this year. They're always on edge going into the last 4 months, but maybe have a little bit more reason to be this year than in past years.
Yeah, there's definitely some unique price action, but, I would note that there's kind of a half-life to Donald Trump, right? So two Thursdays ago, we get over 16. I want to say intraday we may have touched 17. Then last Thursday we get to about 16, and then on his latest blow up we can barely get to 13. So, when we have kind of multiple flare-ups, one thing we do know is that VIX gets stiffer. I mean, it's a good thing to shake out the mom and pop. I love you. I really do. I love you, Mom. I love you, Dad. Stay out of the vol space. It's not for you. And when we shake out some of the mom and pops and the people that think this is easy money, which is what kind of happened the last few weeks, I think it's good for markets. It allows the VIX to kind of properly price in risk, which I don't think it had been. I mean, the VIX at 9.5 or 9, and the VIX futures trading barely above that with a VVIX of 65, and everybody and their mother selling S&P puts, right? Like, my director of operations is married to a market maker in the SPX. We had him speak at an event that I had a few weeks back, and he was basically like, all I do is trade big orders and buy puts from retail and buy puts from RIAs. He's like, that is my job. And when that's happening, then you've got, you're in, it's good to shake some of that out, make people realize that it's not such easy money, and you can get scared, and especially in the VIX space. So that's kind of my kind of one of the reasons why we do see that. And like I said, you're right. Markets are a little bit queasy right now.
I don't think the public has a really good handle on how one-sided some of that flow can be in some of these products. I didn't see as much of that when I was in the S, but certainly when I was in some of the big listed names like Intel and others, the flow was completely one-sided in the fact that all paper did was dump calls and buy puts over and over and over again because it was just enormous funds just hedging and generating income, and you could set your watch by effectively every single month when it would come on board exactly how much when the calls would get crushed and the puts would bid up, and it was time and again. And so I'd imagine other products do fare similarly. That said, speaking of similar, this week, kind of similar to last week, but a little bit quieter. Mr. Rhodes, like I said, we were talking earlier, I know you really want to weigh in on last week because it was a rock'em sock'em robots week. VIX pretty much every record you could think of, shattering all over the place. What caught your eye as you were forced to be on the sidelines last week, sir?
I wasn't forced to be on the sidelines. I was choosing to be on the sidelines. Just the continued taking advantage. The continued people putting on bullish VIX spreads and coming up with more and more unique ways. I'm actually going to talk about that when you get me to the weeklies in a minute. There's starting to be more and more unique ways that people are trying to get that long exposure to volatility, but not necessarily pay up for it. And the longer we're in a low volatility environment, the more we see people looking to sell some VIX options to pay for some VIX options. So there were some interesting spreads along those lines from this past week. The settlement coming in close to 13 2 weeks in a row. I think that's kind of interesting as well. We had the weeklies settle at 1285. So I've said this before, and right after I said it, we went to a single digit VIX again. But you really would think that the low is in for the low's been put in for this year, unless the low, not including the last 2 weeks of the year, the low's probably been put in for this year.
Well, Russell, you could make an argument that the lows for the next 5 years are in. We saw similar patterns. A lot of people are like, 18 of the last blah, 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 VIX settles below 10 have been. Well, guess what? Prior to that, there had only been, I think, 18, and I think 7 of them were in 06 and 07. So these things bunch, right? Volatility does bunch. And, I would be less than surprised. I'm not saying that we're going to see a bunch of 50 VIXs, but I would be less than surprised if the market doesn't start moving around a little more. And a VIX is back to the 12, 13, 14 that I used to complain about being too low. And so, I do think it's entirely possible the lows are in. Maybe we see one last gasp if and when they pass the debt ceiling. If they get a tax reform package through, you could see vol crater then. But those are one, big ifs, and two, not necessarily something that would lead you to a 9 VIX because I'd imagine that if news comes out that there is a agreement in principle with that passes. I mean, how many handles is a tax reform package passing this year worth to markets? Because I think right now they're pricing in a extremely low delta of those being passed. And, what does that do to VIX? I think the debt ceiling signing will provide some relief, but I think that, I don't think that's priced in right now very much at all anyway, because I think most Republicans have learned their lesson on that.
It's funny. You're right. That was when the low teens was when the broad media typically started writing their articles. How low is too low? When will VIX mean revert back to 20? Since then, we've spent substantial amounts of time, shy of 10. So you're right. A whole new frame of reference for everybody. Perhaps that will be changing. But since he's so excited to do it, we got to get rolling with it. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody. You guys know the drill. I'm not sure if he remembers because it's been a while, but this is the portion of the show where Russell holds court at length. I'd say roughly 40 to 42 minutes, longer than we have left in the show, actually, to talk about VIX weekly options activity. Go forth, sir. Hold court. The floor is yours.
There were a lot of trades on Monday, and then it kind of tapered off. Monday, the very first trade of the day, somebody sold 100 of the September 6th 10.5 puts for a nickel, and then they sold 100, and they did this as a spread, and they sold 100 of the August 30th 18 calls for 55 cents, and a short strangle with different expirations. Diagonal strangle, I don't know, but they took in 60 cents, just looking for VIX, and I wonder if after we get past August 30th expiration, if maybe they come in and sell some September 6th calls to keep that trade on, or maybe they're worried about something between August 30th and September 6th. As far as volatility moving higher, somebody also, and this one was done in a few lots over the course of the day at different prices, but the net came out the same. Somebody sold 250 of the August 30th 13 puts for 79 cents, and then they bought 250 of the September 20th. Those are standard expirations, 13 puts for 84 cents. They ended up paying a nickel for that. Good as long as August 30th settlement is above 13, and then they've got some really cheap puts into September 30th. As I mentioned, they did more lots throughout the day. I'm just going to assume that it was the same person. At one point, I saw a trade go off where they did it at 69 cents, selling the 13 puts and buying the September 13 puts for 74 cents. Still a nickel. Just different prices as the market moved around. A really good trade, a really bad trade here. I've got a good trade and a bad trade into that 1285 settlement on Wednesday morning. Somebody bought 200 of the August 23rd 12.5 puts for 33 cents. Sold 200 of the August 23rd 10 puts for a nickel. They paid 28 cents for that spread, which had no value at expiration. This was the trade that I found really, really interesting. This is the good trade into settlement. Somebody sold 1,500, and this was Monday afternoon, sold 1,500 of the August 23rd 13 puts for 49 cents each. And then they bought 750 of the August 23rd 14 puts for $1.13. So for each of these 1x2 spreads.
Oh, that's a nice trade.
Did you do that?
No, I did not. Okay. I wish I had.
But yeah, and
wow.
I'm gonna. Yeah, it's really nice. So they paid 15 cents for it. VIX settlement again was 1285. Looking through the volume, I think they held it through settlement. They were down 30 cents or 15 cents each, but 30 cents on those short 13 puts. They were up $1.15 on those 14 puts. When you net out the cost and everything else, I believe they have a profit of 70 cents a spread.
That's pretty nice.
But beyond that, if you and I'm not supposed to be writing stuff up because I'm not supposed to be touching social media until Labor Day. But damn, it's tempting to write this one up because the range of profitability holding it into expiration is really nice. I mean, that's a hell of a trade.
That was and Russell, I'll have you know, our own Matthew Tubby Benson texted me at 3:10 on Wednesday with the VIX 3:10 on Tuesday afternoon with the VIX at what was the VIX was probably like 11, near 11, right? Because that was the day that things really got pummeled on Tuesday, and markets were up a lot and yada yada yada. But he's like, hey, I'm thinking about. He's like, I think we're gonna settle lower tomorrow. I think I'm just gonna hold these puts into expiration. He was long 12.5s. I said, don't be an idiot, sell them. He said, really? I said, yes. So he sold them.
Good.
And they went out completely worthless.
Good.
So,
well, that's how you're supposed to. That's the secret system that we only talk about the classes, right?
Yes. Yeah. Well, it's
what is one of the rules? What is one of the rules?
The first rule of VIX trading is never take VIX into expiration.
Got it.
The second
especially
rule,
if you have a profit.
Especially if you have a profit, that is the single dumbest thing you can do.
Yeah. I mean, if you held the 11 calls, hold them. But
yeah.
But
right.
yeah.
I mean, it was just. But anyway, good job, Matt. You got way to take input.
Yeah. way to listen. Sometimes listening's good. All right, I'm still on Monday.
Oh, you're still on Monday.
All
I'll
right,
go for it, sir.
All right, sorry.
I've got pages.
All right.
Kevin told me I'm supposed to do 28 minutes. Somebody bought late Monday, last Monday trade. Somebody bought 398. I love that they did. I love trades like this because it's easy to track them. Anybody out there that wants me to talk about their trades, don't do even numbers. Do something like 398. Then I'll talk about your trades. Bought 398 of the August 30th, 13.5 calls for 95 cents. Sold 398 of the August 30th, 16 calls for 45 cents. Paid 50 cents on this spread. They look good with VIX above 14. So somebody hoping for a volatility spike. Half the trades that I got were from Monday. Everything's kind of slowed off into Tuesday. Had somebody, and this is a good exit trade. Your buddy Matt wasn't in the he wasn't trading 450 lots, was he?
I'll take his silence as a no.
We lost Mark. Oh well. Somebody late Tuesday sold 450 of the 12 puts of the August 23rd, 12, 36 cents, and bought 450 of the August 23rd 9.5 puts for a nickel. Took in 31 cents, and that thing expired with no value. So nice trade there. Wednesday trade, another person apparently that wants me to track their trade. A throwback there for Mark Sebastian. They bought 472 of the September 20th. I know those are standards. 13 puts for $1.05. They sold 472 of the August 30th 12 puts for 50 cents. Paid 55 cents on this trade. They did this in a lot more lots as well. I'd say probably somewhere between 5,000 and 10,000 times, and a lot of really funny numbered lots. So they're not trying to be very stealth there. Would not be the least bit surprised if after August 30th expiration, if they come in and sell some September 6th or some September 13th options as well. Somebody else sold, and this one's kind of head scratching, a little bit of head scratching, but I think this trade actually ends up being safe if we go into some steep backwardation. Somebody sold the September 20th 24 calls for 25 cents, and then they bought the same number of September 6th 28 calls for 9 cents. So they took in a credit of 16 cents. Vol spike into the week of September 6th. Maybe we invert enough that those 24 calls don't change much in price, and the 28 calls benefit from the short-term spike. And then another trade from Wednesday that I want to do a little bit more work on and maybe come up with an alternative. Somebody sold 580 of the September 13th 12 puts for 48 cents each, and then they only sold 290 of the September 13th 14 calls for $1.09. So they sold half as many calls as puts in kind of a strangle. I would actually consider, if I was going to do something like this, maybe selling 580 of those 14 calls and then going up and purchasing some out of the money calls instead of doing it in this structure, but it's their trade, not my trade. Just kind of curious if they could take in a similar dollar credit and limit their upside risk a little bit. Thursday, as I mentioned, things really started to slow up. Somebody sold I can't read my writing sometimes. Sold 105 of the September 27th. Those are weeklies now. 18 calls for 87 cents, and they bought 105 of the December 20th. 18 calls for $1.67. Maybe trying to set themselves up for volatility late in the year. They also could probably sell calls a couple of more times and cover the cost of those DEES calls. And then finally, this morning, the most traditional trade that I've got, somebody bought 144 of the September 6th, 15 calls for 48 cents, and sold 144 of the September 6th, 22 calls for 12 cents, paid 36 cents, and like many trades, will benefit from a volatility spike. So there you go.
Yeah, I'd also comment that today we've seen, this week we've seen our friend 50 Cent of 50,000 lot fame step in and start building his position since August kind of rolled off. But it was kind of weird. Usually he starts rolling earlier. He waited, but he's bought 50,000 in 2 lots the last 2 days. So there is some position building at the 19 strike, I believe, and at the 18 strike.
Okay. I love it. Mr. Rhodes, we'll have to have you take a week off more frequently because you come back with vigor in your weekly rundown. I like it. Hitting all the action out there this week. So listeners, all of you who say, hey, Russell's weekly rundown is too short. I wanted more meat on the bone. There you go. He gave you a feast this week. Let's move on to the big mothership VIX options. Like I mentioned, a little bit quieter week than last week. Pretty much every day last week had an M after it. Not so much this week. We're back in the K range today as we're halfway through the show or so, a little bit more than halfway through the day. About 376,000 contracts on the tape, so a little bit quieter day this week. Yesterday, about a little over 500,000. Wednesday, 667. Tuesday, 637. And Monday, about 500,000 out there as well. So markedly quieter than last week. No M's on the board. VIX call to put, though. I'm sure Mr. Rhodes is breathing a deep sigh of relief as it slowly eases back from the precipice down to about 3.3 to 1. As in terms of what were the hot strikes, what was lighting it up this week out there in VIX land? We got a new champion, a new contender out here in VIX land. It's been an interesting back and forth for the last few shows as we saw those OCT25s have been ruling the roost for a while. Largely thanks to that massive whale trade that went up about a month ago, that risk reversal versus the OCT25s. We saw about 500,000 of those calls go up in that one trade. So a bit of an outlier there, but we did also profile at the same time growing interest in this SEP 20 strike. It was just a strike du jour. More of these trades keep piling in. And now this week, lo and behold, SEP 20's taken the top spot this week. 668,000 contracts open out there. Number one with a bullet, a full 40-odd thousand contracts higher than the former number one, the OCT25s, bumping them down to the number 2 spot. This gives you some sense of how much paper goes up in VIX land, even on a quiet week. The number one strike has more open than probably, you can pick a bunch of names out there and has more open interest probably than 10 or 20 other names total just on one strike. So a lot of action out there. Number 2, like we said, the OCT25s, 623,000. Then it drops off precipitously to number 3 for the first put on the list. Actually, it's the only put on. Actually, no, there's 2 puts on the list this week. The OCT12 put, 372,000 of those bad boys. I believe that might have been part of that old risk reversal as well. Followed by the OCT15s, the other leg of that. 12-15 versus 25, I believe, were the strikes. 366,000 of that bad boy, taking the number 4 slot. Number 5, the SEP 17s, a comparatively reasonable SEP 17s, 344,000. Number 6, the SEP 23s, 315,000. All the way down to number 7 to even break through 300,000. That's how much open interest is out there right now in VIX land. The SEP 21s, 295,000 contracts. Number 7. Number 8, the SEP 15s, the extremely reasonable SEP 15s, 271,000. Number 9, about 250,000 of the SEP 18s, and rounding out our top 10, the second puts on our list, coming in number 10, the SEP 12 puts. So put traders liking themselves that 12 strike, 253,000 of those bad boys. Total of 11.5 million contracts open out there. So pretty rock'em sock'em robots out there. About 8.9 million on the calls, about 2.6 million on the puts. Mark, we already talked about some other interesting VIX options activity, including the return of our friend Mr. 50 Cent out there in the vol space. Everybody loves that guy. He gives us a lot to talk about, so that's fun and a lot to debate about as well. So let's move on really quickly because we're getting late in the show here. But there was another big development, another product out there that everybody loves to trade in the vol space this week. So if you came in this week and you pulled up your quote on your old standby, your old favorite VXX, and you said, what the heck is going on? It's trading $48, $49. What's going on? It was just at $9. Well, that's of course. We had yet another reverse split, yet another 4-to-1 split. This is actually the 5th time now since inception that VXX has done the reverse dance to the tune of 4-to-1. They had a great breakdown of this. I think it was over on a great infographic. I think it was on sixfigureinvesting.com. Go check it out if you're so inclined. But they have a breakdown of all the splits since inception. Of course, the product launched end of January in 2009 at effectively an adjusted price of what was 100 at the time. Did its first split about a pretty good run, almost 2 years later, November of 2010. It did its first split when it hit 13 back then. Did, of course, all these splits are 4-to-1. Second split in October of 2012, so a full almost 2 years then. So it had a good around 2-year average in the beginning there before it would reverse split, again 4-to-1. Third split coming on the 8th of November 2013. So now we're shrinking that down to about half, right around 12, 13 months there for the third split. The fourth, though, oddly enough, the longest one. Of course, this all has to do, obviously, what's going on in the market, what's going on with the term structure. We've discussed VXX erosion ad nauseum on this program. I won't invoke it yet again here on the show. But the next split didn't come until August of 2016, a full 34 months, almost 3 years later. So that's the longest span where we saw VXX lasting without a split, and then back down to pretty much about 1 year, exactly 12 months for a little more than 12 months. Of course, the 23rd of August this week was when we saw the 5th split. So VXX, the product that keeps on giving, yet again back in the juicy range of the 48, 49 range. How long? Maybe we'll take a market on that maybe later. How long to the next VXX split? Longer than a year, shorter than a year? Interesting. Maybe that could be a crystal ball coming up. And of course, the top action out there in VXX this week, the number one strike are appropriately enough, the puts, they're not maybe as long-term as you might like. They're the SEP 10 puts. These seem pretty quaint in retrospect. All these obviously have to be adjusted for the split. So, but still, interesting stuff. Seeing puts out there. Mr. Meatball, I'm sure you had a lot of chats with your mentees, your chatties this week about VXX. What are your thoughts on this record-breaking, perhaps, 5th reverse split? And the fact that it's only took a year this time. Are you on board with, you think it's going to be a year next time, shorter, longer? What's your thoughts here on all things VXX?
I think we're in a cycle of these being longer. When VXX really faces the pain is when there's like a really heavy contango. And part of the reason why VXX split so relatively quickly was just how ill-timed its launch was. January of 2009. I mean, is there a worse time to launch a long vol product? You tell me. And
VIX was at 50 the day it launched.
Yeah, I mean, so think about that. It had a little bit ill timing. So while VIX is going to be, if VIX is staying below this kind of 10 or 11 time, you know, 10, 11, 12, 13, VXX will be a lot slower. Interestingly, though, the nice thing about it, it's now got some meaty options. It's got some meatiness to it. I do think it'll probably get into the 30s quickly, but that's about it. So it was actually my trade idea of the week was kind of a short VIX play around Jackson Hole and into Labor Day weekend, as that is another period of time where typically we do see traders come in and try and slam stuff a little bit, knowing that, one, there's a long weekend, and two, a lot of liquidity returns the Wednesday after Labor Day. You know, Tuesday for a lot of people that Tuesday, first day at school, mom and dad stay home, and then that Wednesday, that a lot of liquidity returns to markets, and so things get interesting. So it was obviously well liked and well loved in the option pit chat rooms, and it was so well liked that I put it as just an idea of that I liked in terms of long VXX puts. I think I did the September 8th, so weeklies, just to make things better for us. The September 8th weekly, 47.5 puts, and I believe I'm already up significantly, at least a little bit on that purchase price.
Mr. Rhodes, you guys obviously have to hold court there at the options. It's obviously a lot about VIX, but I'm sure people come to you all the time with questions about the slew of VIX-related ETPs. I'm sure VXX is high up on that list. I'd imagine you guys are gearing up for another round of interest in this product post-reverse split. What are your thoughts here on the timing, the nature of it, and do you think this will have a big impact? And also, are you on the same bandwagon as Mr. Meatball? Obviously, steep contango does well to accelerate that time frame. You think we're going to be in set for a little bit longer time frame before the next 4-to-1 rears his ugly head?
Yeah, I do. I think it's going to take a little bit longer for us to get the next split, just because we're overdue for a little bit of backwardation. I think we all know that when it starts hovering around 10, they really like to start targeting when they're going to do the reverse split. I know from speaking to people at Barclays, and we do talk to that team. We've been talking to them a lot lately, and I've gotten some more insight into what they, when they decide to split, how they come up with the idea, and some of it I've probably already said more than I should. So, but with that, they're only allowed to do as much as a 4-for-1 reverse. There is an expense on their end, so they're never in a big hurry to do something like this. So they're not going to do it until they feel like they have to, and I have a funny feeling that VXX is going to do a little bit better than it did from August 9th of last year to August 23rd of this year. The last time period was about 3 years. It was I got November 8th, 2013 to August 9th, 2016. And then it was just a year. And then I'm trying to dig out the last one. There's been 5 of these from what I can see.
Check the notes. It's all there in front of you in a nice infographic.
Well, I didn't get the freaking notes.
34 months. 34 months.
I was busy doing weeklies.
As I said earlier. As I broke down literally for you on the show just a few minutes earlier. 34 months. Until from the last, it was November 8th, 2013 to August 9th, 2016. So, about 34 months, almost exactly 3 years. So, Mr. Rhodes scrambling to find information that he already has at his fingertips. But, interesting stuff. I have to imagine the VXX folks. I would like to chat to them on the show, maybe bring them on one of these days, just to ask them. Maybe they wouldn't admit this on the program, but I have to admit that behind the scenes, they're probably all just flabbergasted at what a success this product has been for them. I can't imagine any of them, when they launched it in their wildest dreams, would imagine that your literal grandmother in Iowa would be slinging 10 lots of VXX out there. Yet that's exactly what we've seen. As in all things in the volatility space, it is continually surprising. That said, speaking of surprising, you guys have been known to surprise us once or twice, so let's see if we can do it again. It's time to check out the Vol voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail. You guys know the drill. Hit us up. Questions, comments, pearls of wisdom, slams of the meatball. All welcome here on the old Vol voicemail. Let's see how many we could squeeze in this week. Let's kick things off. JLC. He just wants to say, this is talking about that story we talked about last week on the show. That he says that VIX 60 guy is just nuts. He's just trying to make a name for himself with that prediction. I'm kind of on board with you. You see a lot of these analysts throwing out these absurd predictions just to get some ink. It certainly worked for him. And if it doesn't work, people forget about it long enough. He can make another one. It's just a way to get some ink for themselves. And hopefully a nice little bonus for them, because that's how they get their paid and get paid at the end of the day. So, yeah, I'm kind of with you on that. He goes on to write, SPX would need to drop over 10% to be right. I don't know about the math on that. I'll have to check that for you. Of course, you have circuit breakers. That'd be a little bit of a challenge. I'm assuming you mean multiple sessions. But that said, yeah, that would certainly send us north pretty aggressively. Mr. Rhodes, you didn't have a chance to weigh in on this, shall we say, dubious story last week. Kevin took your place. What are your thoughts on this guy who's out there and just the notion, the feasibility of us hitting 60 in the VIX, I believe it was by Halloween?
You know, the way that you can make a career is throw outlandish things out there, get one to stick, Abby Joseph Cohen, and then you can make a career.
I was just going to say that.
Why do you think I'm always guessing high VIX on here?
I was going to say you can throw a lot of names under that. You can say Elaine Garzarelli, Abby, a bunch of them have done that, made one outlandish prediction, it worked, and they built a career out of it.
They nailed it. Yeah. Now I actually tried this once when the 1 year average for VIX closed above the 5-year average. It had only happened one time before, and the market was down like 30% 6 months later. So I went out big time with that one, and boy, was I wrong. So it's the same thing, and I think it's the mail or the email basically quantifies my thought behind this one. The guy, it's a way to try and make a name for yourself. I think he probably would have been better off saying 40 instead of 60.
But that wouldn't get him on the radar of all these crazy people who love this stuff.
Yeah. I mean, I guess you're just trying to one-up each other until you're the one with the biggest, with the most outlandish prediction.
Speaking of outlandish, let's see. We got to see how many other outlandish ones we can get. Here's your buddy, Mr. Meatball. He keeps writing into us. FContangotrader. Obviously a big fan of yours, or perhaps not. I don't know. But he always wants to write, are you ready for VIX percent of percent? But he has a real question this time. He also asks, what's your thought on VIXH? Maybe every episode you can give an intro into various vol ETNs and ETFs. Thanks, and keep up the good work. That's actually not a bad idea for a segment. There is this huge, continually expanding, as evidenced by this VIX ETP universe that includes ETNs and ETFs. There's pretty much enough to do a new one every week, let alone the big ones like your VXXs and your XIVs and whatnot. So that's not a bad idea. Maybe I'll consider that for future shows. I'll call it our weird or esoteric or outlandish VIX ETP of the week. Maybe we'll file this one under the first one. I actually wasn't that familiar with it till you hit us up with it. This is the VIXH. This is the First Trust CBOE VIX Tail hedge ETF out here. Trading right now about 26 off about 4/10. About 1.5% out here, 4/10 of a handle out here. So interesting stuff. I don't know, Mr. Soon-to-be Dr. VIX, we'll start with you because it's your job literally to be well-versed on all of this universe of VIX ETPs. As our listener says, what are your thoughts on VIXH?
It's an interesting fund, but, they just changed their investment objective.
Oh, well, there you go.
So they were following one type of index, and now they're actually basically going from cash based on what's going on in VIX. They're going to hold one of three positions. They either they hold the component securities in the NASDAQ 500 large cap index, which is a knockoff of the S&P 500, but with a few differences, and they then they'll actually go to T-bills based on what's going on in VIX. I think they were holding the S&P 500 before, and they switched the strategy behind this one. But it's a nice smart beta idea where I think any fund that has a disciplined approach behind it is a good way for just to get exposure to some sort of smart beta without having to try to manage it themselves. So I kind of like it, especially in this environment where you might be worried about what's going to go on within the markets.
I do like the idea for a new segment. I'll have to mull it over. That's why I like our listeners. They hit us up with good stuff. Oh, by the way, Mr. Meatball, this FContango also wants to know how you hedge your gamma and also your mother-in-law. So, sir, how do you hedge your mother-in-law?
How do I hedge my mother-in-law?
Maybe he knows her. I don't know. I don't know.
I don't know. My mother-in-law is great. It's my father-in-law I got to deal with.
Oh, well, there you go.
No, I'm kidding. He's great too. Managing gamma, there's a couple of ways to do it, and yeah, Russell. But just to Russell's point, I think that's a great idea, and I think Russell should do it, and I think we should add that as a segment. So we're all in agreement. I think that'd be a fun one.
Yes, more work for Russell. Together. I like it. Put it down.
I really like it. Or you and I, or we can take turns. I think that's a great idea because there are some. Believe it or not, they're trying so hard to find.
What are they trying hard to find, sir?
They're trying so hard to find a VIX ETF or ETP that does what we want. Kind of doesn't lose a lot when the VIX is stable, loses when the VIX is down, and makes when the VIX is up. Something that isn't just have VXX disease, which is that contango issue. So that I think that. We're going to see this acceleration in VIX product creation because there is a demand for it, and someone will figure it out. Someone is going to figure it out. There's a few of them that have managed to exist for a long time and not reverse split. So, there are some with a not terrible track record. Anyway, in terms of managing gamma, there are a couple ways to do it. One is to kind of just use delta hedging, which is basically as the underlying moves away from your strikes, you are, if you're long gamma, you're either selling stock or the underlying against it, or for the retail trader, it more makes sense to lighten the position. So if I'm long and at the money straddle and the underlying rallies $2, guess what? Sell a couple calls to flatten the delta. Then when it drops, you can sell a couple puts or you can buy some calls back. Those are typically the ways that I will work to manage gamma, and same on the short end. The other way is to have like a just kind of hard stop ins and outs. The only problem is, you sit there and do kind of a set it and forget it and forget about your gamma, you're setting up for consistent losing. If you actually want gamma, that means you think realized volatility is too low. Now, there's a difference between that and like directional gamma. When I want to make a directional opinion, that's really where I like to use gamma. Especially with the VIX at 9.5. If you thought an underlying was going up, calls were exceptionally good at expressing that opinion because of that burst of gamma in a low volatility environment. So, obviously, I could talk gamma hedging for 3 hours. In fact, we have a 3-hour class on managing gamma in our store. That's just kind of the short version.
Yes, interesting stuff. Speaking of mother-in-laws, Tech Coleslaw says, mother-in-laws always make the most money because they get the last buy call and the first sell call. And those usually are the best calls. So there you go. A lot of mother-in-law input here on the show. I'm not sure. Everyone must know your mother-in-law there, Mark. I don't know. Everyone's also asking about your spreadsheet, Mr. Rhodes, if it's done yet for getting VIX numbers down to zero. How theoretically low can VIX get? Unfortunately, we don't have time to even see that this week anyway, so I'll have to save that for next week. I got a feeling you're probably not done with it yet anyway, or at least not done through compliance. Maybe we'll have to save that. Maybe you'll be done with it by next week's show. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. You guys know the drill. This is the portion of the show where we, at least last week, tried, and this week we try again, to try to nail down that slippery snake that is the old VIX Cash. As we're ending the show here, VIX Cash taking a little bit more on the chin, right around 1140, 11.38 or so. So substantially south of most of our predictions from last week. Like I said, your stand-in there, Mr. Kevin, Mr. Rhodes, he did an able job of filling in for you. He went aggressively north. You must have given him your notes. He picked 18 and a quarter, so he was going for all things north over there last week. Some other calmer heads. We had Matt Amberson on. He was about 14.30. I was even shy of that. I was 13.55. I thought I was pretty low. Then Mr. Meatball was coming in around at 12. So we all pretty much missed, but Mr. Meatball is the closest, so I'll let him have it for this week. Mr. Meatball, you want to go first? Or you want someone else to go first?
I mean, I was by far the closest. And not only that, I said, we're going to see a big push higher in VIX, and then we're going to see things get toward 12. And I was kind of right. You know, we saw that big VIX pop on Wednesday.
I think your mother-in-law is writing in right now. She's saying you were far off, sir. She's embarrassed.
Yeah, my mother. Yes, my mother-in-law. My mother would be more likely to do that than my mother-in-law. But you know, I'll tell you, I think, especially heading into the long weekend, I think that we could see, because Labor Day is next weekend, folks. We'll be through non-farms, and Congress won't be back in session, and I think you're going to be looking at a VIX of about 11.
Straight up 11 for the Meatball. Let's put Mr. Rhodes back in the list because he was out from last week. Mr. Rhodes, you were out last week. I'll let you go next. What are you feeling for next week? We do have a holiday weekend. Bear that in mind.
I know. I was going to say 1080 for that very reason.
Ooh.
Wow.
I know.
Mr. Rhodes going south. That means, listeners. That means
we're going to 20.
Yeah, put on your seatbelts. 20, here we come. Buckle in. It's going to be a crazy week. Well, Mr. All the Meatball, and even surprisingly, Mr. Rhodes, taking up all the room to the downside. That doesn't leave me much room to play unless I want to get crazy low, and I don't really feel like a 10.5 or below. So I guess I'm going to have to go north, and because they kind of squeezed it more this week than I thought. I was higher than we are here, so I thought we were going to be a little bit higher here. So I'll buck the trend. I will say I'm not really feeling this, but just for... Let's give it a little bit of fun here, give a little bit of range. I'm going to say 11.75, so slightly higher. Something will happen to spike us over the course of next week, and then as we get towards the end of the week, getting into that inevitable holiday weekend, we'll see it come off, but not perhaps as much as we are now. Interesting stuff, listeners. Write in. Let us know your thoughts. You too can play the crystal ball at home, the home game. There's no prizes, at least not yet, but maybe we'll add some prizes as we keep on going. Unfortunately, that music means we've come to the end. We had another epic journey through the world of volatility. We talked VIX weeklies, we talked VIX regulars, talked a little bit of crude VIX, we talked some VXX, talked mother-in-laws, talked all that fun stuff. What a great show it was. But before we go, one last time around the horn, what's cooking with everybody? Let's start over there in the land of the CBOE. Mr. Rhodes, what are you guys cooking up over there?
We're starting to prep for RMC over in London, which is September 11th through the 13th. That usually takes an awful lot of my time. There are some cheap tickets to London if you want to join us, Mark.
I keep getting Mark. This is like the third time I've been asked in like the span of 24 hours if I'm going to RMC Europe.
That's why we want you there.
I would love to go. I'm not quite there yet.
Well, how about Hong Kong, December 6th, 7th?
How about Bonita Springs, March whenever?
Yeah, March 8th through 10th, I believe. That's pretty impressive, isn't it? Okay. Yeah. That I know them off the top of my head.
Some might say scary, but to each their own, sir.
Yeah. My parents have a place in Naples, so I'll probably be down for that one, and then my wife and I'll talk about London in 2018.
It's not going to be London in 2018.
Oh, where's it going to be?
I can't say.
Is it going to be somewhere where I'm going to want to go?
I can't say.
All right. Well, if it's somewhere
because I don't know, but I do know we never do it in the same place twice. So.
All right. Well, unless it's every other year at the exact same resort.
Exactly. I was going to say yes. But listeners, if you want to hit it up, you still got time. There are tickets out there. You may probably see Russell out there. Maybe you'll see me out there. I don't know. I haven't made up my mind yet. A lot of things going on I need to tend to here. But maybe I'll pop my head up over there in the outskirts of London. We shall see. Mr. Meatball, what's cooking in the land of all things Carmen Line by way of the pit?
All three of us are going to be at a certain event on September 27th through the 29th. It is the CBOE Option Pit Westmark Pro Trader Summit, where you're going to get to see me, you're going to see Mark, you're going to see Russell, you'll get a live option block, probably a live vol views, and we're all going to talk about some fun stuff. In addition, Todd Gordon, Scott Shellady, who is awesome. If you've never listened to Scott Shellady, he's awesome. And of course, I'll have something fun, and Russell always brings something interesting and unique. Maybe this time he'll talk about aforementioned sweet little put play that we were discussing a little earlier in the show. So if you're listening to this, Mark will put a link to it in the show notes, and when we post this tomorrow, and come and check it out. Maybe you'll even put it out in a tweet.
Speaking of checking things out, listeners, if you are joining us live, stay tuned. Go get a beverage, a snack, maybe a nice little potty break, and come back right around. Also enjoy some options news. We'll play that for you in the interim. Come back in about 25 minutes for the start of TWIFO this week in futures options. You're glad what Russell was talking about with OIV and OVX and all things crude volatility, as well as S&P and Skew and everything else we can get our hands on. I think we're going to have some metals. Going to have a familiar name on there for all you option block listeners on that show today as well, so stay tuned for that. If you're joining us after the fact, we like you guys too. Enjoy the show. Enjoy all the other fun stuff. Have a safe weekend, and we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.